Students, so once again we are here to continue a very important chapter which is also called backbone of accountancy, that is of journals. So here we are going to discuss different kinds of the examples. Okay, how we have to pass all the journal entries and all, what are the rules or regulation that we have already seen. Hopefully you are aware about all the terms like traditional rules of debit and credit as well as modern rules of debit and credit. So in our previous class we have already discussed about a few of the transactions. So later on we are going to continue with that. Okay, so here we have sold goods to Mr. Joseph worth rupees 10,000 in cash. So in this transactions, two parties are going to affect it. First, that is of cash, and second one is of sales. Here we are selling goods in cash. So we don't have to focus on the name of the person. Okay. So two items are going to affect it, cash and sales. And cash, whenever you will sold out goods, cash will come into the business, and whenever cash will enter into the business, we have to debit it. Okay, sales, that is part of income nominal account. So as we use to credit our incomes account, so that's why cash account debit to sales account. As narration we can write being goods sold rupees 10,000. Okay, then we have transaction number 12, sold goods to Joseph worth rupees 10,000. So in this transaction we can say that is credit transaction. So again two parties will be affected. First, a person to whom we have sold goods, that is Mr. Joseph, that is of debtors. Okay, and second one is sell. So Joseph is a part of natural personal account, and according to the rules we have to debit the receiver, because once when we will sold out goods, definitely someone will receive, and in this question Mr. Joseph is receiver, so that's why we have to debit him, and accordingly sales account we have to credit it. Okay, next we have Joseph returned goods worth rupees 2,000. So whatever goods we have already sold out to Mr. Joseph in the last time, that he has returned to us. So sales return, okay, and Joseph, these two accounts will be appear or the affected. Here Mr. Joseph, again they are part of natural personal account, and this time he is giver. Okay, because he is returning, so he is giver, and we know we have to credit the giver. So what we have to debit? We have to debit sales return, because whenever sales return will increase or whenever sales return will be there, we have to debit it. So sales return account debit, or in the place of sales return we can use to write return inward. Why inward? Because whatever goods we have already sold out, that is going to revert us, that is in. Okay, so that's why sales return account or the return inwards account debit to Joseph account. And narration, as you can write, being goods written by Joseph rupees 2,000. Next we have paid salaries rupees 10,000 in cash. So whatever expenses we used to pay, salary or the electricity or anything, all we know, all the expenses we have to debit, and for all the expenses most probably our cash or the bank may be decrease. So that's why salary account debit to cash account, that is our journal entry. Transaction number 15, paid electricity bill rupees 10,000 by check. All the payment we can do by the in cash or the by check. So once when you will pay off electricity bill by check, definitely electricity expenses, that is expense, and that's why we have to debit it. And bank, so for this transaction bank will decrease, so that's why we have to credit our bank. Electricity account debited to bank account, this is our simple entry. Withdraw cash rupees 10,000 for household expenses. Household expenses or the personal consumption, that is called here that is called drawings, and always we have to debit the drawings, because drawing, that is a kind of expense which decreases the capital. Okay, so that's why drawing account debit. So whatever things you will withdraw, just like once when you will withdraw cash, so at that time drawings account debit to cash. If we have withdrawn from bank for personal use, then drawings account debit to bank account. If we have withdrawn goods for personal use, so in that case drawings account debit to purchase account. If we have withdrawn all cash and goods both at the same time, so in that case drawings account debit to cash account because we have withdrawn cash, or to purchase account we have also withdrawn the goods for personal use. Okay, we have transaction number 17th, traveling advance given to Raju, maybe the worker or the employee to whom we have given traveling amount, that is in advance. Okay, that is of 10,000. So traveling advance, that is a kind of expense, so that's why we have to debit it. So that's why expense or the traveling advance account debit to cash account. Okay, we can write like this. Then again here, or we have given this to Raju, sorry, in the place of this entry we can write Raju's account debit to cash account. Okay, because we have given this amount to Raju, so we can write Raju's account debit to cash account. Next, Raju submitted traveling bill rupees 9,500, balance refunded. So when Raju will submit the details, so in that case we can put this entry, traveling expense, whatever bills he will submit for that traveling expenses account debit, cash account debit because he will return us the amount. So cash account debit to traveling advance account. If we have debited in previous transaction traveling advance, so here we have to write to traveling advance. If we have written there Raju, then here we have to write Raju in the place of traveling advanced account. Okay, next we have Raju submitted traveling bill rupees 10,500. So just remember, in the previous transactions we had given much amount than the expenses, but here actual expense amount was less than more than the paid amount. So here we can pass this entry, traveling expenses, which is the actual amount for which we will receive bills from Raju. So traveling expenses account debit 10,500, and already we have given 10,000 as advance, so that's why to traveling advance that we have to write 10,000, and to cash account 500 that we have to write. Okay, it was something about the transactions. The next, here we have paid rupees 5,000 to Mr. Max, who was a creditor. So creditor, finally he is a receiver and we have to debit the receiver. So that's why Max account debit to cash account. This we have to pass. If we will pay this amount by check, at that time Max account debit to bank account. Okay. So next we have transaction number 21. That is very important transactions, because something hidden item is there which we have to identify. What is there? Paid rupees 5,000 to Mr. Max, who was a creditor, in the full settlement of 5,500. Okay, so according to this transaction we have to pay 5,500 to our creditor, but actually we have paid 5,000 under the final settlement. Final settlement, it means after this payment we are not going to make any payment to just clear the transaction. So what we can do? So here first we have cleared the account of Mr. X, and the balancing or the dues amount for Mr. X was 5,500. So that's why we have to debit Mr. X by 5,500. So here you can see Max account debited by 5,500. So what we have given? Sir, actually we have given 5,000 because we have paid 5,000. Huh? So cash will decrease by 5,000. So that's why we have to credit our cash by 5,000. So you can check in this transaction, we are getting profit worth rupees 500. Actually अगर आपको किसी को 5,500 देना है और सामने वाला 5,000 में सेटल हो गया, हैप्पी हो गया कि ओके ठीक है डन, अब कोई और बैलेंस नहीं है, so that 500, that is a kind of profit for us, that is a kind of income. So as you know, we have to credit our income or the profits. So that's why Max is a receiver, we have to debit him by 5,500 to cash account 5,000 because cash will decrease by 5,000 only, and here we are getting profit worth of is 500. So that's why that discount received account will be credited. Next we have withdraw goods costing 5,000 for personal use, that we have already discussed. Once when you will withdraw something for your personal use, at that time we have to debit our drawings account. So drawings account debit to purchase account. Purchase, why we have credited purchase? Just because of the drawings, because when you will withdraw goods from the business for personal use, it will decrease the amount of purchase. Next we have goods costing 5,000 given as a sample. So goods worth rupees 5,000 we have given as a sample. So for that we have to find out why we used to provide samples in the business organization. That is a way of advertising. So in the place of sample distribution expenses, we can use to write advertisement expense account. I have written here sample expenses, and you can also write advertisement expenses. Okay. So sample expenses or advertisement expenses account debit, because always we have to debit expenses and we have to credit purchase. Why we have to credit purchase? Because of the we are giving goods in sample. Goods are going to decrease, the amount of purchase goods are going to decrease. Next we have goods costing 5,000 given as donation. Charity, donation, these are kind of expenses, and again we have to same expense account debit, that is of charity account debit or the donation account debit to purchase account. Next, and the very important transactions, rupees 5,000 due from Mohan are irrecoverable. Okay, so there was a 5,000 due for due to Mohan, and the amount, that amount 5,000 rupees is not in the position to recover from that person. So if we are not in the position to recover some amount from some debtors, in that case that amount is considered as bad debt. Bad debt, it means that is going to bad. Okay, debtors who are not good, debtors those who do not clear their debts amount or the balance amount, they are called bad debts. So here we have to transfer this amount, okay, non-recoverable amount, that we can transfer into the bad debts amount. So that's why bad debts account debit, and we have to credit the party who is not going to make the payment. To bad debts account debit to Mohan's account. Like this we have to pass entry. Next we have rupees 5,000 was due from Mohan and declared insolvent and could recover only 40% of the amount. Actually we have to receive same 5,000 rupees, but here we are receiving just only the 40 paisa. We can recover just only 40% of the dues amount. So first we have to find out the amount which we are going to receive in this transaction, and that is 40% of 5,000. It means 2,000. Okay, so if we are getting 2,000 out of 5,000, then what about 3,000, rest of the 60%? So that is going to bad debt. Okay, because out of 5,000 we will recover just only 2,000, and still that 3,000 is can't be recovered. So for that, for the amount of not going to receive, we have to debit bad debts account debit by 3,000 and cash account debit 2,000, because we are receiving again, and again we have to credit Mr. Mohan by 5,000. Then next we have transaction number 27. Rupees 5,000 was written off previously as bad debts, now recovered this year. May be possible in the business organizations, if we have written back any amount which was not recovered from any debtors in the previous year or the previous session, that we have recovered this year. But we have to find out in the previous year that amount we have already transferred into the bad debts, and that amount we are going to receive here. So in that case, actually we are receiving money, we are getting money, so that's why we have to debit cash account, or if we are receiving check, in that case we can debit our a bank account. Cash or bank, anything can be debited. So cash account debit, but we have to credit the source. What is the source of this cash? So the source of this cash is the bad debts written off or the bad debt recovered. Okay, so for this we can pass this entry, cash account debit to bad debt recovered account. The next we have transaction number 28 here. Rupees 5,000 deposited by Max directly in our bank account. Mr. Max, who was our debtors, and they have directly deposited their dues amount into our bank account. So we are not receiving that amount in cash, that will be deposited into the bank account. So our bank balance will increase, so that's why we have to debit our bank account debit. And what we have to credit? We have to credit here Mr. Max. Okay, so bank account debit because our bank is going to increase, and we have to credit Mr. Max because Max, that is also our assets because he is our debtor. Debtors comes under the assets, and once when assets will decrease according to the modern concept, we have to decrease it. Okay, next, stock worth rupees 5,000 destroyed by fire, lost by fire. So if you will lose any kind of goods or anything by any reason, so in the business we have lost by that thing. Just like goods lost by fire, it means we are facing loss just because of the fire. So that's why we have to write loss by fire account debit. To purchase, why again we have to write purchase? We can use to write goods in the place of purchase, but as you know that we have already discussed, in the place of goods we have to write purchase or the sales. Sales word we use once when we use to sell the goods. Here we are not selling goods, but actually we are also not buying the goods. But whatever goods will damage or the destroyed or by the loss, that will be out of purchase. Whatever goods we have purchased, out of that we are going to lose it. So that's why our purchase is going to decrease, and that's why we have to credit our purchase. So loss by fire account debit to purchase account. Next we have insurance claim recovered or the received 5,000. So here again we have received 5,000 rupees. So that's why bank account debit to insurance company account rupees 5,000. That entry we can write because insurance company most probably will pay you amount in your bank account directly. So bank account debit, but this amount we are receiving from insurance company, so that's why we have to write here insurance. Next we have insurance claim received from insurance company worth rupees 4,000 against the loss of 5,000. As we have seen in our previous transaction, the loss by fire was 5,000, but here we are getting or receiving just only 4,000 as a compensation. So there was an actual of loss rupees 5,000, we are getting 4,000. So that 1,000 is profit we can use to transfer in profit and loss. So here actually we are getting 4,000, that's why 4,000 we have to write bank account debit. 1,000 that is still in loss, so that's why we had to debit because losses or the expenses we have to debit. So profit and loss account debit, we have to write profit and loss account because later on you will learn how to prepare trading account, profit and loss account. So this profit and loss we have transfer in that account. So profit and loss account debit 1,000, and we have to credit, what we have to credit to insurance company, that is of 5,000. Next we have depreciation charge on fixed assets at the rate of 10,000 per annum. So in this transactions we have the value of depreciation machinery will decrease by 10%, and the actual cost of the machinery is given 1 lakh rupees, and the 10% of 1 lakh will be 10,000. So that's why depreciation account debit to fixed assets account, which is 10,000. Okay, narration being depreciation charge on fixed assets. So here I would like to clear you one and very important thing. Depreciation, that is a kind of expense, that is called non-cash expense, because in the business we have divided all the expenses into two parts. One is of cash expense and second one is of non-cash expenses. All the expenses which decreases the cash amount, they are called cash expenditures, or expenses which never affects our cash, that is called non-cash. So here in this case depreciation, that is expense, that's why we have to debit, but this expense will decrease the value of our machinery, which is very important assets. So the value of machinery will decrease in the place of cash. Clear? Next, salary due to staff but not paid. Okay, actually there was a dues amount worth rupees 5,000 which we have to pay to our employees. So for that, when any kind of expense will due, simply we have to debit that particular expense. So salary account debit to outstanding salary account. We have to credit our outstanding salary account. Okay. Insurance premium paid in advance. So prepaid insurance account debit to cash we have to write, not to insurance account. Okay. Prepaid insurance account debit to cash we can write.